Welcome to Java. Thank you for joining me. It is December 10th, 2024, and it is Tuesday. Now, yesterday was a very interesting day in the market as it was Monday, showing weakness. Now, going a little bit against what some of the expectations would have been, but there were a few movers, most notably the stimulus that was coming out into the Chinese economy. So with that boosted the Chinese stock market and Asian stock markets in general. When it does that, the flow of money is looking for a better return to make higher amounts of money. So with that, a certain amount of money flowed out of the US stock markets into the Asian markets. However, today we may have that market shift back. Now we've got some individual movers. We are very much into a headline-driven market. So with this, let's go right into our favorite risk indicator. At the moment, the MMRI is at 279.1. So as I said yesterday, leveling at this kind of area here, right around 280, risk increasing slightly. We are in high territory. And with this, we had the relative strength of the dollar go above 106 again. Now, the rising dollar and relative strength of the dollar, rather, and the 10-year yield both put pressure on the markets, as well as I said, the Asian stock markets had quite a bit of a boost yesterday. Now, if you're in the Chinese ADRs, you probably did very well. Now, we've got the fear greed meter I'd like to touch on a bit. It's gone down a little bit deeper into the neutral territory. So showing a shift out of the greed mentality, at least for the US stock markets for the moment. Now, with this, I want to go back to the relative strength of the dollar. Now, this does not mean that it is increasing in purchase power. All this means is that the other currencies are weakening faster. So with this, it's floating the dollar. When the dollar goes up, stock market takes a hit and comes down. So with this, we watched the stock market yesterday. It's only slightly. This is nothing major, but it did retrace a bit yesterday. We had gold come up a slight bit. Oil is staying relatively level. And with everything going on in the Middle East, this is showing that the market believes there will be weak demand going forward, or at least that prices will continue to decrease. So this is something to watch going forward as far as an indicator. Got another one as well, and I'll go over that in a moment. Now, the futures are showing that there might be a bit of a rebound, at least this morning, slightly, if nothing else. We've got silver retracing a bit, had a good day yesterday. Now, cryptocurrencies had a significant drop, particularly on one exchange, which is Coinbase. Coinbase is the larger exchange that, as you know, lately, I spoke about this yesterday, the United States did move some of their Bitcoin from the Silk Road that they had seized onto the blockchain there, onto the exchange. So that is normally what they do right before they consider selling. So with that, took a hit of pressure, but it is already recovered on a large amount of buying as well, and above 97,000 again from the 94,000 level. So cryptocurrencies are showing a bit of strength, and I believe they will continue to do so. Now, they could have some dips, and those are buying opportunities, in my opinion. We'll be watching it as long as it stays above. It looks to be about 92 to 93,000. It held that 94,000 level quite well. So as long as it stays above that, still quite good. So with this, I would like to talk about the sentiment. Now, retailers yesterday trying to figure out what's going on because I can't figure out why stocks were pulling back, and they're trying to say some other various concerns, but really it was majorly on the Chinese stimulus that came out, and that kind of disrupted the balance between the yields on the 10-year and the relative strength of the dollar. So that is what you watch prior to the stock market. keep an eye on those. We are also looking at what we call dock copper. Now, copper is dropping, and as I was just speaking about oil, now we call it dock copper and oil because they tend to have a read on the markets, and they're telling us a story. And this is that going forward, there will be weak demand because oil is in the production as well as copper, building materials, uh, industrials, and multiple others. So with both of these commodities are dropping significantly, it says there is a weak sentiment in the overall market moving forward for the real economy. Now, we are still expecting core CPI numbers will be coming in tomorrow, and this is what the Federal Reserve will be looking at for their rate cut decision, still pricing in heavily a quarter point. Now, with this, we had Europe markets ending their gain streak. They were weak as well, similar reasons, but they've also got some jobs issues. So, with this saying the same thing, crude oil falling, gold is gaining in a fear market, but we're not watching the volatility index go up. So, this tells me it's on weak demand. So, with this, taking a look at the calendar, not too much today, looking at productivity and labor costs. Now, labor and employment is the large one that I am looking at going forward. Not so much inflation because that is going to fluctuate and they can manipulate those numbers even more, believe it or not, than the labor market. Now we're getting core CPI tomorrow prior to the market open. So have your trade set prior to the market open tomorrow? Now I'd like to go over a few single movers, if you will. We have Google now in the news saying they have cracked the quantum computing challenge with a new chip. They're calling it the Willow chip. Now, I disagree with a lot of the sentiment that this is now going to break blockchains. It has increased hash rate. However, it has a lot of failures and a lot of weaknesses that I think are still in the works and need to be worked out. So, not too concerned at this moment. It is a massive advance in technology and quite exciting. This more will drive, in my opinion, the move for artificial intelligence, something that does not require stability and that computing power to go within that. So, with this, we've also got China probing NVIDIA in major escalation of the chip war. So, with this, we could watch a hit to NVIDIA. We did watch a bit of a drop yesterday as this was announced, and the chip could go further into weakness between these two stories. We'll be keeping an eye on that. We've got a short story with Hershey. The company Mondelez, is major snack corporation, could possibly bid to purchase the company of Hershey's for billions. But what happened on the news of this, whether they do or not, the shares of Hershey soared and the shares of Mondelez at the same time dropped. So this is kind of a short cheat sheet summary to tell you that investors don't think that Hershey is a very good buy going forward, and that Mondelez perhaps should give it a second look as far as profitability. Now, moving into the background, as I would like to say, we've got this story coming out, Bank of International Settlements, BIS, saying the fiscal debt binge is the world's largest stability threat. Now, we've been talking about the debt market in general being the largest threat for quite some time now. Now they're speaking about it also coming direct from, as I like to call them, the Tower of Babylon. Now, this debt has been increasing lately, not just government debt, but also private debt, which is a little more frightening. The reason it's a little more frightening, not because it's larger, but because it is less disclosed, so much less known about what we call the darker side of the debt, private money, that could also roll out as soon as this government debt rolls over. Now, as an example, we've got turmoil in Paris and Berlin as the European Central Bank policy in Frankfurt. They're supposed to be coming out with their rate hike. They'll be announcing is expected quarter point rate hike. But what's going on is Macron and Scholz both having issues over their economies. Mostly in Paris is political turmoil and debt that they cannot restructure. In Berlin, Germany, they are having more issues related to their actual economy with the labor, as well as production costs due to energy rising costs, because they can no longer get cheap energy from Russia and also their back channels. So Germany is facing more massive layoffs. As I was speaking about, labor going forward is going to be the issue, and it's going to hit the economies from the bottom up. And I think that's the one that we need to watch as far as the real economy. Now, we've got Boeing laying off hundreds more in Washington and California. These are part of their announced cuts. They're also going to affect their suppliers and the chain moving back. Now, we've got this other one, a poll. Polls don't really matter because you can skew who you're asking, but they're saying that they expect them to cut faster to revive their flagging economy. Now, I definitely agree their economy is definitely flagging, and so is multiple others. Now, we've got the United States dragging them all up with this new Trump trade. This is all a political thing, and there is nothing underpinning it at the moment. We have to see some real production come in here, some real movement. So we'll see this going forward. Now, with this, I would like to just kind of go over this war thing. No, it's a bit dark, but there is a lot of movement that could increase from here. Now, direct Pentagon quote saying they saw the opportunity in Syria that strikes were possible. So, as we were talking about yesterday, they moved in and made 75 multiple strikes. And they're also saying that they're backing the Israeli invasion of Syria. Now, with all of these claims, what it boils down to is the United States is bolstering war economy, and that in the end is going to fail. But in the meantime, it's keeping the economy liquid because it is creating a need to send billions of dollars over to the war and recycle these back to top contractors and major companies that lobbied for the political sphere that is getting wealthy off of this. Okay, now going over, we've got another short story. Belarus saying they've got nuclear weapons more powerful than the nickname Helen that was just fired off from Russia. Now, this is coming from Lukashenko, saying that he has made this statement in response to questions regarding the deployment of Russia's new missile system. Now, this, in my opinion, is a little bit more saber rattling than anything else, but just again, the ramp up and where they are putting their dollars in the economy now. The last thing I would like to bring up is they've got a quote unquote mystery illness, already calling it disease X that we've been speaking about for over a year. And that now, of course, there's more coming out from the Republic of Congo, always from a third world country. Why is that? Ask that question. So with this, that's all I've got for the moment. We'll be speaking later, watching that 10-year yield as well as the dollar right now, because the disturbances in the currency markets are showing up there. So with this, wish you all a great trading day, wonderful day in general. Until I see you again, stay free.